This is the Financially Simple Podcast, a show dedicated to destroying the complexities of money for today's small business owner. And now, here's your host, pizza-loving, certified financial planner, Justin Goodbread.
Welcome to Financially Simple. Today, we're going to talk about one of the most beloved subjects, one that's near and dear to my heart, taxes. Like, seriously? I wanted to take a minute in this financial section and deal with taxes. I have so many clients who, when they first start working with us as business owners, they don't realize the sheer amount of money that business owners pay in taxes. And we deal with different types of taxes. We deal with federal, state, local, sometimes county taxes. There's actually a county here in East Tennessee that they tax you on the value of the equipment that you have. So there are so many different types of taxes, and being self-employed versus having employees, of course, if you make a profit versus if you lose, so if you're just starting a business or if you just have a business, you're like, man, I never really understand how much money I have in taxes. I have a client that I've worked with for years now, and they have a very successful second generation business. And whenever I took over the management with them on this business to help them build the value so they could sell it, the business owner didn't realize that he was 2 years behind in taxes. Not federal taxes, but some other taxes that we're going to go through here. And it actually ended up costing a lot of money. He didn't realize it because it didn't realize that was a tax he had to pay. So I want to deal with the various taxes that we business owners pay today. So I've titled today's episode, the 11, yeah, you heard me, 11 different taxes small business owners could pay. Well, the first one is probably the most popular. Whether or not you're a business owner, you will pay this tax for sure, and that's what's called the income tax. See, here in the United States, we have this tax that basically, as we make money, we pay money. And the income tax is taxed at various levels. So I want to deal with that very quickly. If you're a sole proprietor, for example, you're not incorporated, you're an unincorporated business, or you're not an LLC, then you're going to pay taxes, and you're also going to pay what's called self-employment tax. But you're going to pay taxes, and it's going to be reflected on your personal tax return. So the owner pays the self-employment tax, which covers the Social Security and Medicare if profits are made in the company. Another type of entity is a partnership. A partnership is where two or more businesses have a signed partnership agreement and have invested in a business. Now, the partnership itself doesn't pay taxes, but the partners do on their individual tax returns. So the partnership does provide information that shows the amount of money that each partner receives, the income, expenses, and other deductions, and shifts it out to the partners. Probably the most common is a limited liability company, and there's a number of different ways we could deal with this. We could deal with it as a corporation, as a partnership, as a single member, et cetera, et cetera, et cetera. But for the most part, partnerships are treated as sole proprietors, or partnerships treated with many members. That's basically not in the form of an S corporation, taxed as an S corporation, or as a C corporation. You're going to basically flow that through and deal with it on your personal tax return. So there's an LLC that's a single member LLC. You're going to flow that on your personal tax returns. But if you're anything else, you're going to have your own tax return, particular tax form that has to be filed. And your CPA is going to help you navigate these things. You have a corporation. A corporation is made up of stockholders who own stock. Typically, we refer to these as C Corps. C corporations. Yep, they have their own taxes and their own special tax rates. They have their own special tax rates. They have deadlines they have to meet. So if you're a corporation, you have your own special tax rates. An S corporation is a pass-through to the owners, so it's not going to pay it at the corporate level, but it's going to pay it on the owner's tax rates. And there's still going to be forms just like in the LLC that you have to file if you're an S corporation or partnership. But an S corporation, you have your own forms, but you're going to be taxed as a flow-through is what it's called, or pass-through is another term used. And it's going to be taxable on the owner's tax rates. Those are the income taxes, and those are the most popular. What about the estimated tax? So the estimated tax is basically a pay-as-you-go, as I mentioned earlier. You don't have, as a business owner, automatic taxes withheld by your employer like potential employees do if you ever had a job where you had taxes withheld every paycheck. It's not how it works for many employers. So instead, you have to make estimated tax payments. There's typically 4 times a year you have to do this. You're basically making a good faith estimate. There's a calculation that's done following the previous year's tax returns, and you break it out quarterly, and you pay the taxes. So that's the estimated tax. Now, let's get into some that you may not think about. How about the tax or sales tax on products or services sold? Now, it's not in every state, but there are certain states, if you sell a product. I'm talking about buying it. If you sell a product, there's taxes you owe. And it's not in every state again, but it's in some state. In fact, this year, there's some crazy taxes that took place in South Dakota. I don't have time to get into it. It has to do with internet-based sales. And South Dakota was basically forcing other states to pay a South Dakota state tax on a particular eligibility. It's just interesting. So there may be in your particular jurisdiction a seller's sales tax. Another tax that you may have, the fourth one, is what's called a property tax on business property. Like I was mentioning earlier, there's some cities or municipalities or counties, due to the local taxing authority, will allow you or will assess you a value on the property, and there's a certain tax that's paid. Certain taxes paid. The fifth tax is what's called an excise tax. Now, excise taxes are paid for those businesses in certain types, like fuels and other activities like transportation and communications. Excise taxes are paid to the IRS. They're paid quarterly or annually, depending on the usage, on Form 720. It's called an excise tax, or basically a consumption tax. A sixth tax, which I kind of alluded to earlier, is self-employment tax. See, as a business owner, again, I don't receive a typical paycheck. So being I don't receive a paycheck, I'm required to pay self-employment tax. Typically, they're partners or sole proprietors that deal with this. And currently, it's 15.2% of the net income of my business. Now, once you break over, and I'm going from memory here, I think it's $128,700. So I always say $130,000. Once you go over $130,000 in income, I think it's a little lower than that off the top of my head. I'll put in the show notes the exact number. And check out the blog Financially Simple, where we're putting the actual details on the blog, financiallysimple.com. And you'll see this particular episode very soon on there. I'll put the exact number in that. But once you make over, nonetheless, $130,000, your self-employment tax falls dramatically to where you're only paying Medicare tax. And I think it's like 2.8% at that point. So there's a tax playing game we can play even with self-employment tax. But nonetheless, because you're not receiving a W-2 and the business is not paying half of the payroll tax, you're required to pay the self-employment tax. And on another side note, the self-employment tax is often the one that gets the business owners. It's the one that we cannot use our federal deductions, like the 401k deductions. Doesn't help reduce self-employment tax. Now, there's a number of ways you can legally and tactically reduce self-employment tax. But it's a hard one. And many people don't realize the self-employment tax when they first start a business. And they realize, well, I didn't make any money, but yet now I've got to pay 15% of this small amount of money and I can't reduce it. So it's self-employment tax.
You are listening to Financially Simple, destroying the complexities of money for today's small business owner.
The seventh thing we deal with is what's called employment tax or payroll taxes. And it's basically paid on employees' earnings. So if you hire somebody, you're required to pay half of their FICA FUTA. So FICA is the Social Security and Medicare, and FUTA is dealing with the federal unemployment tax. Okay, so those are the two, FICA FUTA. And small businesses have to deduct this amount of money from their business and give it to the employees. So you figure 7.1% potentially, if not a little bit more, depending on the calculation of the employees' payroll taxes, you're covering yourself. I made a comment one time to one of the employees. I learned from this one. And they said, well, I'm due for a pay raise. And they were. I got busy and forgot about it. I said, yeah, your salary's at X, and whatever the number was. And they looked at me sideways. And I said, I don't make that much money. I only make Y. And I said, no. Your budgetary number is X. And it was a difference of like $4,000. And they was like, Justin, you don't pay me that much money. I said, I'm confident I do. I just looked at the line item budget. What I was looking at was I was calculating the half of the FICA FUTA tax that I was paying. That was an expense on the company. So I was looking at the total payroll expense that employee was costing me. And they were just looking at their net. And there was a difference there. So learn from me. Don't make that mistake. Okay. The payroll tax will be filed on W-2 for your employees, by the way, and there's certain requirements on that. FUTA is reported and paid on a separate income. Social Security, Medicare taxes are paid. It's all done through your payroll provider. This is one of those things I just tell you to sub out. Unless you're a huge business and you got someone dedicated solely to just dealing with payroll, I'm a firm believer in just letting a payroll provider do the payroll for you. You don't want to mess around with the Department of Labor, and you don't want to mess around with people's money. But that's number 7. It's employment payroll taxes. Number 8 is gross receipt tax. So most states will have a state income tax. That's common. But some states, like Nevada, Texas, impose a gross receipts tax on the business instead of a state income tax. So depending on which state you're in, these taxes will move a little bit. So there'll be a gross receipts or gross revenues is what those jurisdictions tax the business on. Now, there's some deductions allowed. Sole proprietorships are typically exempt from paying this tax in those particular states, but nonetheless, there is a gross receipts tax. In Tennessee, we have what's called a franchise tax. It's very similar to that gross receipts tax. And so it's called a franchise tax, and it's taxed on LLCs and some partnerships, but mostly LLCs. And typically it's based on the company's net worth. Sometimes it's based on the assets. Sometimes it's based on the number of shares. But in a franchise, man, it varies from state to state. And in Tennessee, it's a franchise tax. It's 6% plus that we have to pay here in Tennessee. So that's the franchise tax. The other one you have is sales tax. Anytime you buy something, you're paying a tax. If you go to the gas pump, put gas inside your vehicle, you're paying a tax. Whenever you sell something, you could potentially, like we mentioned earlier, have a tax. You could have a tax paying in the state that you're in. But anytime we buy something, we're paying a tax. To me, that's one of the craziest taxes there are. I wish there was less income taxes and more sales taxes. That way it would tax the population equally. That's my personal political opinion. You may disagree with me, and feel free to write me all the nasty emails. I'm one that believes that you shouldn't be taxed on income. You should be taxed on spending, is the way I view things. But nonetheless, there's a sales tax. Some states don't have a sales tax that you pay. Alaska, Delaware, Hawaii, Montana, New Hampshire, and Oregon. Based on my research, those states have sales taxes. In other states, like Florida, you don't have a sales tax on certain things. Tennessee, we have sales tax on some things and not the other. And some things have higher sales tax. So it just depends on how the states are collecting revenue. Number 11 is you have real estate taxes. So if you own a piece of land, you're going to pay taxes on that real estate. There's going to be an assessed value called a property tax, and you're going to pay taxes on that. Just like the house that you live in, you pay taxes. Number 12 is an unusual one. It could be in your case. In Tennessee, we have a professional's tax, a professional privilege tax. The professional privilege tax is a tax of $400 to professionals. And depending on the type of business, you could be taxed. So my company, Heritage Investors, pays a professional privilege tax. So it just depends on the states, folks. That's 12 different taxes that I've seen. I'm sure there's some that I haven't, because one thing we know is Uncle Sam is good at getting in our pockets, which is why it is so vital for us to have tax planning. We're going to talk about that in an episode coming up. You're like, Justin, you've been saying that for a while now. I'm trying to lay some foundation. I've got a lot of followers. We have a lot of consistent listeners to the show. It's pretty amazing to watch which episodes have more traction. And I think people are going back, at least I'm told people are going back and listening to some shows over and over again because the information was so good for them. Other shows I listened to at one time because the information was so bad. But no, a lot of people are saying, Justin, I wish you should get to planning. And we're getting really close. But I have to lay the foundation so those who are following through this journey on growing the value of your company, you can understand some of the basics. And taxes is a basic. You say, well, how in the world does that affect the value of my company? Case in point, go back to my client. We could not sell the company at the price he had desired because there was an undue tax. There was a tax he had no idea about that the bookkeeper missed, that the office manager who was in charge of it missed, and so it lost us the sale. So taxes are vital. You have to have a tax process, and this is where a good CPA, I say it all the time, a good CPA can help you with this. So those are 12 different taxes that your business may experience. I'm not saying they're going to experience all 12. They could. I don't think they would, but there's 12 taxes that you could experience. And so with that, I'm going to tell you, like I said earlier, check out the blog, Financially Simple. We put all the detailed show notes there. And while you're there, sign up for the newsletter. Some of the best writing I do goes out in the newsletter. We've just changed the structure of our blog around. I'm going to make the blog post a little less contextual, drop the context down in it, and give more information here on the podcast and in the books. We have lots of books coming up. We've got some online courses we're creating for business owners. I'm excited about that. We got speaking engagements coming up. If you've never heard me speak, I think I'm pretty good at it. I can hold a room's attention. Every time I speak out and about, people are like, dude, that was really good. Thank you. It's a little bit more of instead of a teaching style like I'm doing here on the podcast, it's more of a entertaining and at the same time educating style. So guys, like I said every week, life is hard. It is. Life is good. Can be frustrating. Taxes make me want to do bad things. I do not like taxes. I understand we got to pay them. Look, let's continue to make our lives at least financially simple. Hey, y'all go out and create a great day.
You have been listening to the Financially Simple podcast. The information in this show is for informational purposes only. This show is not investment advice. Instead, seek help from a competent financial advisor. Justin Goodbread, CFP, is an investment advisor representative of Heritage Investors, a registered investment advisor.